Hey, welcome. In this short video, I'm going to be talking about what is an IRA, what is a Roth IRA, what is a tax deferred IRA. All of these terms you hear from your financial advisors. You probably have some of you that are watching this video. And in this video, I'm going to give you some basic definitions of what that means. And if you're looking to actually start it into a business, how you can pull that money out and utilize it to invest into a business, which could be more lucrative. So let's dive into this short video to give you some basics. I'll see you on the inside. You're going to love this video. Take care. Welcome back. Okay, great to have you here. In this video, we're going to, as I said, we're going to be talking about what is Roth IRAs, what is deferred IRAs, what is all this about. So in this short video, I'm going to kind of break this down for you using ChatGPT. So it's been going through a lot of searches and checks and balances, and this is some good information you can use. And again, if you really want to get more insight, make sure you refer to your experts, your tax expert, whoever you use. But this is a good way to learn some of the basics about what is Roth IRAs and what are IRAs and how you can use them to your advantage. So first thing is first, I'm going to explain to you what is a Roth IRA. So traditionally, IRAs, you can contribute pre-tax income, meaning you may be able to deduct contributions from your taxable income, lowering your tax bill for the year. Growth. So obviously, you're looking to grow your investment. You're looking to use that money to capitalize. Investments grow tax deferred, meaning you don't pay taxes on earnings until you withdraw them. So there you go. Withdrawals generally taxed on a regular income upon withdrawal during retirement. Now, withdrawals before the age of 59 and a half, you may incur some penalties and taxes. So check with your administrator on that. Roth IRA contributions are made with after-tax income, so you don't get tax deduction up front. Growth, well, grow tax-free. Qualified with withdrawals are tax-free as well. Look at withdrawals, okay? You can withdraw the contribution anytime, tax and penalty-free. Earnings and withdrawals are tax-free in retirement if conditions are met, right? Example, account held for at least 5 years, or you're over the age of 59 and a half. Good to know that. Tax deferred IRAs concept. A tax deferred IRA, like a traditional IRA, allows you to defer paying taxes on your contribution and investment gains until you withdraw funds in retirement. Differences from Roth. Unlike Roth IRAs, tax deferred IRAs provide a tax benefit up front through deductions, but withdrawals in retirement will be taxed in income. All right. Now, tax treatment and contributions. A traditional IRA contributes to may be taxable. Roth IRA contributions are made with after-tax dollars. Tax treatment of withdrawals. Traditional IRA withdrawals are taxable. Roth IRA qualified with withdrawals are tax-free. So check what you have. Income, age, and income limits. Both Roth IRAs have income limits with contributions, but no age limit. Traditional IRA Roths have no income limits, but contributions are restricted after the age of 72 if you are still working. Choosing between them depends on your current versus your future tax situation. Retirement goals and income expenses allows you to consider consulting with a financial advisor for personal advice. Now, I also ask this question: is how do I pull out money from my Roth IRA let's say for a business, for something that I want to invest in that would have a higher return on my investment? So this is what the answer came out to be. Withdrawing money from both Roth IRA or to investment in a business is possible, but it's important to understand the rules to avoid taxes and penalties. Here's how you can approach it. Step one. Okay, steps to withdrawal from a Roth IRA. Understanding the withdrawal rules. Contributions versus earnings. You could withdraw your contributions, the money you put in, at any time, tax and penalty free, because taxes have already been paid on these funds. Earnings. With the withdrawal earnings, investment gains before the age of 59 and a half could incur taxes and a 10% yearly withdrawal penalty unless you withdraw for an exception. Now, I want you to analyze this for a second. People still do this. Why people do this even though there's penalties? because their return on their investment on their business is much higher than the penalty that they're paying. So here's an example I'll give you. Just suppose you want to pull out $100,000, okay? But you're paying 10% penalty, okay? That's $10,000. However, if that investment is very lucrative and you have checked the numbers, you make sense, you feel good about it, and you have the staying capital, you could still pull out that and you make 90,000 you pulled out. You invest maybe 60 or 70,000 of it, right? You have some cushion, and you make in the next year 150,000 in that business, or 200,000, whatever the numbers are, right? So think about this for a second. Even though it costed you $10,000, okay, but you made 150,000, if you had kept it in that investment, the Roth IRA, you might be earning a 10% interest. Okay, that still would, from 100,000, it would make you 110,000. Good. But here, with a little bit of a risk, but knowing you could do this, you have the knowledge and you have the right support, you make 150 or 200 and maybe even more. That's how entrepreneurs look at businesses. They don't mind risking the penalties because they know what the money can do for them. Okay, it's just like buying something low and it's expecting to go high. You have done a calculated risk analysis. You'd go ahead and do that investment. Okay. Qualifying for exceptions. Certain exceptions allow you to withdraw earnings without a penalty, such as using the funds to pay for first-time home purchases up to $10,000 lifetime limit. Educational expenses, think about that, okay? So it could be in a business where you're getting mentorship. That's part of an education. So think about that. And if you become disabled, investing in a business does not qualify you for such exemptions. Calculate the amount. Determine how much you need to withdraw and ensure it falls within your contributions to avoid penalties. And like I said, even if there are penalties and you have a good opportunity, you have to look at the ROI. For example, if your contribution is $20,000 over the years and you need $15,000, you can withdraw that amount without any issues. That's 75%. There you go. Keep records. Maintain meticulous records with your contributions with withdrawals to avoid complications and verifying amounts if needed. I always recommend using a Google spreadsheet to keep track of your numbers. Initiate with withdrawal. Contact your IRA custodian. This can often be done online, over the phone, through the request of paper. Specify with the withdrawal that you need contributions to avoid penalties. Consider the impact. Evaluate how this withdrawal might impact your retirement savings. Use retirement savings to fund business as a significant decision and should be weighed carefully. I always look at it this way. If you have, let's say, 100,000 in retirement, I would recommend that you take 50%, put it into a business if it is lucrative, or maybe 60%, depending on how excited you are, how confident you feel about the investment. Consider alternatives. Explore other finances such as business loans or personal savings to avoid depletion of your retirement funds. Okay, that's another option. But if this is the only option, this is what we're learning. Consult a financial advisor and implications and advisors to consult with first so they can help you understand and consequences, explore other financial strategies, preserve your retirement savings. Now, you have to understand, if you're consulting the financial advisor, if they have a vested interest for you to keep that money in there, in other words, they make money while it's in their Roth IRA, so it could be a biased opinion. Just saying, okay? So hopefully you like this video, you got some value out of it in the short time. Give me a thumbs up, share this knowledge, and leave a good comment or any comment, all right? And tell me what are some of the topics you'd like to learn so you can have a better quality of life. This is Ash signing off. Make it a great day.